Hey there, everybody. Thomas Wood with Basecamp Trading. It is Monday, June 12th. I'm back after being out Thursday and Friday of last week, and we're going to do another video on some of the biggest mistakes that traders make and hopefully help you avoid some of them. All right, so continuing on that series, today we're going to talk about not knowing your targets. Now, in bonds, we had a breakout earlier today. We came off of a hammer pattern right here in the 60s. We jumped up, we broke the resistance at 54 and 7, and then again resistance at 54 and 10, and we spiked higher. Now you can see we have since then retraced. Now this is especially important if you are a day trader, because we're normally looking for little pops throughout the day where you're taking several $100s a contract out, and then a lot of times it'll go back into consolidation, and as a day trader we try to avoid that. So we're in it for a short period of time, making as much as we can out of that short period of time, and then getting back out of the market, trying to stay flat. So with that being said, with bonds here and with all the markets that we trade, one of the first targets we use in the trading room is we use an indicator called value bars. Now that's available at Basecamp Trading, but you can get that if you shoot an email over to support at Basecamp Trading, but that's not what I'm talking about it. The reason I'm talking about it is because we use it as a target. And the way this works is upper red is your first target. Now, when I say that's your target, that does not mean you close the trade immediately. So if you went long, upper red is going to be the first target on either a 30 or a 60-minute chart. If you go short, lower red is going to be the first target on either a 30 or a 60-minute chart. Now, just because you hit significantly over or undervalued does not mean you close the trade right away. And what we do is once we hit significantly overvalued, we actually start to trail our stop. So we'll drill down, especially with bonds, we'll drill down to a shorter time frame, something like a 500 tick, and we trail our stop up behind it, or you wait until momentum starts to shift. So if you were trailing your stop by a 1-bar trailing stop, that means you would have been getting out right around here when it first pop back a little bit. And the reason we do a trailing stop instead of just taking profits when you hit that target is because that allows the market to potentially run your direction, which brings me into my next point. A lot of traders make the mistake of not allowing their winners to actually achieve their full potential. So for example, let's say we had taken, hypothetically speaking, taken a short here off of this bearish divergence in bonds, and our first target was, let's say, 4 or 5 ticks away. So if the short was at 15, that means our first target would have been 10, 30 seconds right here. Alrighty. So instead of just taking profits when we hit 10, we do a trailing stop and we start doing a 1-bar trailing stop. And that allows the market, if it's going to continue to run. So by trailing our stop like that, you actually would have stayed in all the way down until 230 seconds. So you made an extra 8 ticks on that trade and made nearly double what your initial target would have been because you did a trailing stop. So again, point number 1, know where your targets are, whether that be a technical strategy or looking at fundamental numbers or looking at an indicator like value bar, support or resistance or anything like that. And then number 2, allow your winners to run. Just because you hit your target doesn't mean you close right away. A lot of times what we'll do is we'll trail stops behind it and give that trade the potential to continue to move our direction even more. And occasionally you'll catch a runner like this and you'll make even more on that trade than you otherwise would have. All right, so that's it for today. I will see you in the trading room bright and early tomorrow morning. If you're enjoying these videos, don't forget to like the video and subscribe, and feel free to browse the channel for other training and education tips. That's it for now, and until next time, happy trading.